the contract rate and IBR. So in Nakisa, we have the option of either using the contract rate if we have it, or we can use the IBR. Depending on what we select, this rate is used to calculate the present value of minimum lease payment, that is to calculate the initial liability amount. And the IBR is a calculated rate. It's based on a multiple assumption, and you probably get this rate from the treasury or similar department. And at the contract level, under accounting page, we have to input the rate that will be used for the calculation. And we just have to input the number over here without the percentage sign. And up to 4 decimal places are allowed here. And we have the switch in the manager page under the accounting setting to enable IBR. So once it is enabled, if the contract rate is kept as 0, the application will look for the IBR configured in the manager page at activation group level. That is considering the company code, validity, and the date of activation. Therefore, it is therefore the selection of activation date or the effective date in case of lease modification is very important because it determines which IBR the system will populate. And this is what we have in the backend. Here we are under master data configuration. We have selected the system, the company, and under the incremental borrowing rate, we have the list of IBRs that are available. And for, let's say this one, this simply states that excuse me. This simply states that the every contract having 0 to 36 months validity for the company code D111. If the activation happens between March 2017 and May 2023, the application will use 3.5% as the nominal rate. And if we need to add the asset class to this asset class as a determination condition 2, then there is another switch in the backend where called use asset class for IBR determination, so that we can populate the asset class and use that one as a condition to determine which IBR rate to be used. Do anyone have any question? So another thing we need to note is whatever we enter at the contract rate, we are entering it as a nominal rate. So nominal rate is what we are entering into the contract, and the application will calculate the effective rate based on the compounding frequency and if the 360 convention is on or off. The compounding frequency indicates the number of times the interest will be calculated, and it is available in the contract level. Under contract rate, here we have the compounding frequency. We have 6 frequencies. Annually means one time, that is interest is calculated just one time in the year, and semi-annually means twice, and monthly is 12 times, bi-monthly is 6 times, quarterly is 4 times, and daily is 365 times. So let's see an example. And I'm selecting a contract here. And in accounting page, So in accounting page, we have the contract rate and we are inputting 3% as the nominal rate. And if our compounding frequency is monthly, the system will calculate the effective rate based on it. So let's say I'm sending it to assessment. I'm approving this one. And I'm going to the activation group level. I'm sending it to assessment to get our preliminary schedule. And I can view schedule, all column. So the effective rate used is 3.042. And we have a website here where we can validate the effective rate. So let's say we have 3% as the nominal rate. And the compounding frequency is monthly, so 12 times. And number of period 1. I'm calculating it, and we have 3.0416. Let's go to the application, and if you hover over here, it says 3.0416. And again, let's try a daily one. So let's go to the contract level. I'm calling it back. And I'm going to the accounting page and I'm changing it to daily. Now let's send it to assessment and I'm approving it. And in the AG level, I can see the schedule. All column. And the effective interest rate is 3.045. So let's go to the website and see. So I have the nominal rate 3% and the compounding frequency is daily. So I'm keeping 365 and I'm calculating. So over here we have the effective rate at 3.0453. So we have the same 3.0453. But if we have an annual compounding, then the interest is calculated once, and hence there will not be any difference between the nominal and the effective rate. Do anyone have any question?
Pratibha, if it is a quarter, we will have a four number, is it? Divided by 4?
Yeah. That means it's 4 times and
Yes, in your calculator, yeah, it will be
in
4,
the
right?
calculator it will be 4 and we can calculate it. It will be 3.03.
And half yearly would be 6 again. Yeah, okay.
Half year.
This calculator, you got it through Google, from Google, is it?
Yes, I have the website in the slides and I will send it to you once this is over. So we use this formula. We can validate it in the Excel too. Using this formula, so it's 1 plus rate divided by the number of period raised to the period minus 1. Any other question?
Just a note here that the effective rate formula that we use, it doesn't belong to Nakisa, and you can find it on several sources, several sites. That is just one example.
Sure, yeah.
Now, let's do a scenario regarding the IBR. So let's go to the application. Here I have the accounting um, page, and I'm keeping the contract rate as 0, and my IBR is enabled. So, excuse me. Yes, and in terms, I have a base rent for $1,000, and the amount frequency is one time, payment frequency is monthly, and the validity is from Jan 2023 to December 2023. Now I'm going to the to approve this contract, and I'm going to the activation group level. Over here, I am exercising only the base rent, and I'm sending it to assessment. Keeping the activation date as 1st Jan 2022. Sorry, 2023. Selecting the reception date. Again, it doesn't have any financial impact, so selecting something over here and activate. Over here, I'm selecting 1st Jan 2023 and I'm submitting them. So now let's go to the backend. Master data configuration, and I'm selecting the system. And the company, and I'm getting the incremental borrowing rate. Over here, we have the activation date as at 1st Jan 2023. So that, and the validity of my contract is 12 months, and hence the system should use 3.5 as the nominal rate. Let's see if that is the case. So I'm going to the system. I can check the schedule, all column, and I have 3.562 as the effective rate. Now let's see. In contract level, my compounding frequency is daily. So let's see if we have the correct effective rate. So it's 3.5 and the compounding is 365, and calculate. It's 3.562, same as we have in the schedule, 3.562. Now I am activating this AG. Okay, I've already activated. Now let's do, we have another term here for supplement starting from 1st July 2023. Let's do a reassessment to exercise this term. So I am clicking on reassessment, and the reason code is reassessment. And again, If the contract uses IBR, then we don't have to select the modify contract rate checkbox. You will have the option to update IBR later in the process. And if the contract uses contract rate and if you want to change the contract rate to IBR, then we can select the modify contract rate and we can keep the contract rate as 0. But for now, let's update the IBR. I'm submitting it. Now a draft will be created and then we can exercise the supplemental. Now terms and condition. Now I'm exercising this one and I'm sending it to assessment. And I want the effective date from 1st July 2023. And we have this checkbox to update IBR and I'm clicking on that. And submit. So again, the system will, let's go to the back end. Now this application will search for the rate which is there available for 1st July 2023. And again, the validity of my contract is 7 months remaining. So it comes under this. And the system will use 8% as the nominal rate. Let's see that. A preliminary schedule is created. Now we can check if we have the correct effective date. So it's 8.328. Let's see the website. It's 8 percentage nominal rate and calculate it. So it's 8.328. Do anyone have any question?
Pratibha, what is the daily effective interest rate column?
Okay, so over in Nakisa, we calculate everything, we granulate everything on daily basis. So that's the lowest level of granulation we have. The interest and everything is calculated based on number of days.
Okay.
Do anyone have any other question? Now, I'm going to the draft. I'm deleting this draft. And let's say we have been using IBR. And now for this particular reassessment, I want to start using the contract rate. I can always do the reassessment and I can modify the contract rate and I can input the contract rate over here. Let's say for this contract and from this point of time, I need to use 5%. I can say 5 over here and submit it. Again, a draft will be created. So and I can go to the terms and condition and I can exercise this term, send it to assessment, and I can keep the same July 2023 as the effective date and I can submit it. Since we have already input the contract rate, the update IBR checkbox is not available anymore. So I can submit it. And if you see the schedule, all column, we have the 5% effective rate. Similarly, if we are using the contract rate, we have been using the contract rate in the contract and we need to change, switch to IBR, we can do that just by keeping the checking on the modify contract rate checkbox and keeping the contract rate as field as 0. Do anyone have any question regarding this? Now, if the modify contract rate is usually, as we have seen, it's not checked. So we have a button in our back end whereby we can switch this on and it will enable the modify contract checkbox will be checked by default during these events. And another one, yes. Now let's move on to Mars contract rate change using the template. If we want to change the contract rate for few contracts without having any other terms, we can simply take the modification file, add the details of the contract, and we can change the contract rate over here. And in the lease component modification, we can add a supplement for $1. And then during the activation group modification, we can we can say no to likely to exercise. And then once we upload it, only the contract rate will be changed.